The markets are still plunging. The S&P 500 just broke a support zone and fell big time with huge gaps. The NASDAQ is even worse, it's down 33% from its highs, and in the last few days it plunged and broke its recent lows. What drove this strong plunge was the inflation data, which was much worse than expected. Everyone was expecting inflation to slow down, but that's not happening. Inflation is not slowing down at all, and this means the Fed is going to have to raise interest rates, and maybe they could have to rise more than expected. This would be devastating for the stock market. But the Fed doesn't have much choices. They have to rise if they want to lower inflation. There is no other choice. So the markets could plunge more. Probably this is not the bottom. In times like this, when the market is particularly weak, I like to read what Warren Buffett says about stock market crashes. His approach is so simple, but yet very few people follows it. Everyone knows Warren Buffett is the person who obtained the most from financial markets. And everyone knows his strategy. Everyone knows he doesn't sell when the market goes down. So in this video we are going to see what Warren Buffett does when the market plunges. First of all, he says, it should be an enormous advantage for investors in stocks to have those wildly fluctuating valuations placed on their holdings. This is a first very important lesson. This market plunge is giving us the opportunity to buy stocks at very low prices. In this paragraph he was making an example using a farm. He was talking about a farm he bought, and he told a story very similar to Ben Graham, Mr. Market stories. He said, if a moody fellow with a farm bordering my property yelled out a price every day to me, at which he would either buy my farm or sell me his, and those prices varied widely over short periods of time depending on his mental state, how in the world could I be other than benefited by his erratic behavior? If his daily shout-out was ridiculously low, and I had some spare cash, I would buy his farm. If the number he yelled was absurdly high, I could either sell to him or just go on farming. Very simple, but yet so hard to put in practice. A lot of people is not able to hold on when the market is plunging. Then he says, owners of stocks, however, too often let the capricious and often irrational behavior of their fellow owners cause them to behave irrationally as well. Because there is so much chatter about markets, the economy, interest rates, price behavior of stocks, some investors believe it is important to listen to pundits, and worse yet, important to consider acting upon their comments. Those people who can sit quietly for decades when they own a farm or apartment house too often become frenetic when they are exposed to a stream of stock quotations and accompanying commentators delivering an implied message of don't just sit there, do something. Instead, in most cases, the best thing to do is absolutely nothing. Tumbling markets can be helpful to the true investor if he has cash available when prices get far out of line with values. A climate of fear is your friend when investing. A euphoric world is your enemy. During the extraordinary financial panic that occurred late in 2008, I never gave a thought to selling my farm or New York real estate, even though a severe recession was clearly brewing. And if I had owned 100% of a solid business with good long-term prospects, it would have been foolish for me to even consider dumping it. So why would I have sold my stocks that were small participations in wonderful businesses? True, any of them might eventually disappoint, but as a group, they were certain to do well. Could anyone really believe the earth was going to swallow up the incredible productive assets and unlimited human ingenuity existing in America? Then Warren Buffett says, the when is also important. The main danger is that the timid or beginning investor will enter the market at a time of extreme exuberance and then become disillusioned when paper losses occur. Remember the late Barton Briggs observation, a bull market is like sex, it feels best just before it ends. The antidote to that kind of mistiming is for an investor to accumulate shares over a long period and never to sell when the news is bad and stocks are well off their highs. Super simple, but yet no one can do this. When the market plunges and is very far away from its highs, everyone wants to sell, everyone wants to run away. This is just human nature, but we need to fight human nature to be great investors. There is a reason why the best investors don't short stocks, try to sell them as few as possible, and invest for the long term. There is a reason why Warren Buffett has been the best wealth accumulator in the financial industry, because he's very patient and he's a very rational investor. Lately on YouTube everyone seems to be a macro expert, a macro investor, so I want to finish this video with a few words by Warren Buffett regarding macro investing. He says, forming macro opinions or listening to the macro or market predictions of others is a waste of time. Indeed, it is dangerous because it may blur your vision of the facts that are truly important. Warren Buffett limits himself to finding very good businesses, investing in them at good prices, and holding them potentially forever. This is the simple secret to his success. So guys, don't let panic take control of your decisions. You need to be rational investors, you need to be wise, and you need to be intelligent. That's it for this video. Let me know what you think about Warren Buffett words and subscribe to my YouTube channel. See you next time. Bye!